Hi there, welcome to GrainTV. It's Wednesday, January 11th, one day before USDA's big flurry of crop data. We had a lower close on the day. Let's take a look at GrainEdge's trading platform and see where we closed. In Chicago, corn closing down 1 1/4, although it was as much as 5 down at one point through the day. Beans also down 3 3/4, off as much as 12 at one point, and wheat in Chicago did not manage a recovery, closing down 8 3/4. News today was pretty light. There's continued waiting and marking time, if you will, until tomorrow's flurry of USDA data. We'll talk about some of that here in a minute. But news out today was kind of limited. There was the EIA data that was certainly supportive for corn use and ethanol production. Ethanol production posting yet again another increase to 1.05 million barrels per day, up 6,000 barrels from last week's record high. However, on the negative side, stocks of ethanol were up sharply, gaining 5%, gaining 1 million barrels on the week, up to 20.1 million barrels. That certainly is detrimental to the potential margins for ethanol manufacturers as we move forward in the rest of the marketing year. But let's talk about what some of the data is expected to show tomorrow. And first of all, let's start with ethanol. That has been a very good spot in the corn demand situation. We've seen corn demand or corn use for ethanol up sharply. Production on a weekly basis has been ranging around 4% a week above last year. Conversely, USDA is only factoring in about a 2.5% increase. So overall, ethanol production has been very good. My guess is we'll probably see USDA ratchet up their ethanol production forecast in the coming supply and demand report tomorrow by 50 to 100 million bushels. So that would certainly be supportive. However, on the other side of the spectrum, I think you've got corn exports that are, on the other hand, very good for this time of year, are probably going to remain unchanged because we have the expectations of a very big South American corn crop coming down the pipe. We've got Brazil recovering from last year's drought with a big bumper crop expected. We got Argentina increasing. They have no taxes this year, this time around, so that's going to basically keep them active in that March to August window in the international market. So overall, I wouldn't expect USDA to be raising their export forecast, even though we've been on a very good clip as of the first half of the marketing year. On the negative side of the demand equation, I think corn use numbers are exceptionally high. USDA has over a 500 million bushel increase. That's up 10% from last year's numbers. I don't think we'll be able to broach that, and I think the quarterly stocks number that will come out tomorrow will be an indication of whether our corn use for feed has been as robust as USDA is expected. Keep in mind that for the first quarter of the grain marketing year, cattle on feed numbers were flat compared to the same quarter last year. Production of broilers, production of hogs were basically 2 to 3% higher versus the same quarter last year. All of those things combined, even though we have cheaper corn costs, I don't think are going to fuel a 10% bump in corn demand when you factor in we have big supplies of DDGs in the marketplace. We've got sorghum. We've got cheap soy meal. All of those factors are going to make it difficult, in my opinion, to see a 10% increase in feed use year on year. So when we look at the quarterly stocks forecast for next year, for the report tomorrow, expectations are for about a 12.3 billion bushel corn stocks number as of December 1. The range of estimates from 11.6 to 12.7. I wouldn't be surprised to see us come in on the high end of this range, maybe 12.5, 12.6, depending on how it plays out. On soybeans, I'm more in conjunction with the analysts here at 2.94 would sort of be my expectation as well. Wheat, on the other hand, certainly USDA has a big increase in feed use of wheat. They went from 152 to 260 year on year in feed use of wheat. So that number will be in question when we get this quarterly stocks number from wheat. So keep in mind 2.06 billion bushels is the December 1 forecast for stocks. Looking at ending stocks, here's what traders are looking for: a slight reduction in corn ending stocks, a slight reduction in soybean ending stocks from last month's report, and a slight increase in wheat. All of these numbers are obviously, in the case of corn and beans, contingent on USDA's final corn and soybean forecasts for production. So those numbers are expected to maybe tick up a little bit, but not real big changes overall are expected. Looking at the trade action today, certainly we had in beans, a big range here. We traded as high as that 1016 mark we've been talking about the last few days. We got into that 1016 mark overnight, quickly eroded below it, traded down to the 1001 range before recovering back to 1010 on the close. It was kind of a choppy day, no real firm direction one way or the other. Again, I think most people are sort of waiting for tomorrow's data to get an indication. Other things to watch in tomorrow's report, the winter wheat plantings. We've talked about this in previous grain TVs. The trade is looking for a 2 million acre drop in winter wheat plantings year on year. Keep in mind the trade has done a pretty miserable job of predicting this number. They tend to overestimate how much wheat will get planted in the fall, and this number may be subject to being even lower than what the trade is expected. So a trade looking for a 2 million acre drop could be as much as 2.5 to 3 million acres. I wouldn't be surprised by that, given how poor, especially in the hard red winter wheat area, how poor things are there for growing wheat compared to other crops. So keep that in mind tomorrow. As always, if you want to learn more about how we can help you in your own grain marketing situation, visit us online at GrainHedge.com. Tomorrow we'll be talking about this monumental set of data, so stay tuned tomorrow and we'll digest what happens in the report. Have a great day. We'll see you tomorrow.